Hi guys, this is the introduction for our third online module, number 3, which is focused on financial analysis. Now, at this point, the module, what you're going to do is the date that we've set aside for this online module, you should use class time to meet with your team, okay? And you can meet in the classroom or in the atrium or wherever you want and bring up and actually work for about an hour on this particular project. It'll probably take you more than an hour to do this, but it's relatively straightforward. So in the online module 3 folder, okay, on the class notebooks, you're going to see a couple of documents, and I need to bring mine up here. There'll be a document that says instructions, and then there'll be a financial analysis template, okay? Open both of those and save them to either your personal folder or save them to your own device, okay? But just what we're going to do is we're going to work as a team. You will be working as a team to fill out this template and to upload only one copy to your team folder that we have created in recent weeks, okay? So basically what you're going to do is you're going to go to Yahoo Finance, and you're going to bring up Yahoo Finance, and you're going to look at you're going to search for your specific retailer on Yahoo Finance, and you're going to look for the financials. You're going to want to bring up the income statement and the balance sheet for the last 3 full reporting periods, and that's annual reporting periods. Make sure you're not looking at quarterly, because I think some of these online programs or online websites will default to the quarterly, and you don't want that. You want the annual. And then you're going to enter in the spreadsheet, and I'm going to walk you through. We're going to use an example retailer, and I'm going to walk you through here in just a minute on what to look for and what to enter into the financial analysis template. The templates I've created should line up almost perfectly with the categories and the financial statements provided by Yahoo Finance, okay? So use specifically Yahoo Finance. I find the Yahoo Finance to be a little bit simpler and easier to understand than Google Finance. And in Google Finance, there's a lot of things that don't add up because there's things that are not showing up as individual line items. So stick to Yahoo Finance, and then you will enter, you're going to need to bring up the income statement and the balance sheet and look for specific entries to enter into the template, the financial analysis template, which is an Excel spreadsheet. And again, I'm going to walk you through how to do, I'm going to give you an example for one retailer for 1 year only. And then what you're going to do is over to the right on the template, you will need to calculate 10 financial metrics. And that includes asset turnover, inventory turnover, cost of goods sold percentage, gross margin percentage, selling and general administrative expense percentage, and these are percentages of net sales, net profit percentage, return on assets, and then the DE ratio, the debt to equity ratio, the quick ratio, and the current ratio. So it's going to be those 10 financial metrics that you're going to calculate for your retailer for each of the last 3 years. And then you're going to pick 2 competitors. That is 2 publicly traded competitors that you can get access to their financials on Yahoo Finance. And you're going to compare those competitors' most recent annual reporting periods with your retailer's most recent annual reporting periods, okay? And then you're going to use that analysis, you're going to use those numbers to begin to provide some kind of an analysis of your retailer. You don't need to provide that as part of this assignment. The whole point of this assignment is to get you moving on your retailer project in specific reference to beginning to calculate the financials and making sense of that. Okay, so so we're going to go on next to I'm going to walk you through a short example using Yahoo Finance and entering numbers into the spreadsheet and doing some quick calculations, and then that should set you up. Okay, so stay tuned, and we'll move into the next step here in just a second. Okay.
Okay, hi guys. So here we are, and I'll make sure everything is recording. We've got everything fired up here. So I'm going to go ahead and bring up Yahoo Finance. We're going to go ahead and use Sears as our first example. So Yahoo Finance, bring that up. All right. And then go ahead, and what you'll do for your project is I've also got the template that you'll be using, and you'll see over here that I've already pre-filled some numbers in, and I'm going to use Sears as my example. So I'm going to go ahead and change this out, Sears, and I'm not going to be putting in competitor 1, competitor 2, and I'm only going to be doing Sears for 2016 just for illustration purposes. So I went ahead and brought up Yahoo Finance, type in Sears or your retailer, and that's the stock ticker for Sears Holding Corporation. So bring that up, okay? And then what you're going to want to do is we're going to want to bring up the financials right here. So click on financials, close that out, and then we've got our income statement, balance sheet, and statement of cash flow. Make sure that you have annual data, not quarterly data, okay? Because quarterly data isn't really going to help us for this particular project. So you want to make sure you have annual data. And I'm going to put in Sears for 2016, which means I'm going to use year end. This is their fiscal reporting year end, which is 1/28/2017. That's going to be good enough for us in terms of being able to put in numbers just for illustration purposes. So you go down there, you see all the income statement items, and we're going to input those. So what you want to do is when you enter the numbers, you want to enter the numbers directly from Yahoo Finance, and don't do any calculations on your own. And the reason for that is in many cases the numbers that appear here don't calculate fully, either because of rounding errors or because of omitted items. So sometimes if you calculate in a spreadsheet the numbers from here, you might get different numbers for net income or different numbers for total assets and so on. So this is our income statement, and here's our balance sheet, okay? I'm going to point a few things out. So what you see down here, okay, I've already input many of these numbers. So cash and cash equivalents for year ending 1/28/2017, which is our 2016 column. So cash and cash equivalents of 286, okay, and short-term investments of 0, okay. Net receivables 466 right there, okay. Inventory 3959000 right there. Other current assets 285, and then take this number here and just enter it right there. Don't sum these, because oftentimes it's going to sum to a different number, okay. And then going down to non-current assets, all right, long-term investments, Sears has none, not surprising. Property, plant, and equipment of 2240, got it there. Goodwill of 269, check. Intangible assets, I don't know what on earth those could possibly be for Sears. Probably the Craftsman, Kenmore brand names, possibly. Intangible assets 1521, amortization 0, other assets 336, deferred long-term assets 0, and then our total assets right here of 9362000 goes right in right there, okay. And continuing on, let's go ahead and look at our liabilities to make sure I've entered these all correctly. So accounts payable right here, okay, which is what Sears owes to other people, 339,000, and that's short term, okay, that's within 1 year. Current debt of 1,638,000 right there. Other current liabilities of 2,704,000. Excuse me for a second. Okay. And what we're going to do then is we're going to double check our liabilities here. Okay, again, enter the number directly. Total current liabilities, these are things that are owed within 1 year, 4681000. Okay, long-term debt 3808 right here. Other liabilities 3391, got it right there. Deferred long-term charges 1306, and then 0 for minority interest, 0 for negative goodwill. And again, enter the number here in this space right here. Don't sum the column. All right, and then finally for equity, okay, miscellaneous stocks and options, Sears has 0. Redeemable preferred stock, Sears has 0. Preferred stock, Sears has 0. Common stock of 1,000, right there. Okay, and then retained earnings, make sure that you put negative numbers in correctly. You put the negative number, it'll appear in the template as in parentheses, and that of course is the accounting way to express a negative number. So retained earnings of negative 5512000, that looks good. Treasury stock negative, capital surplus of 9130000, other equity minus 1552. Okay, and then again, take this number here and enter it into this cell as a negative. Okay, and then you can go ahead and check if you want. You can go ahead and check, add this in this cell. You see what I've done here? D63 plus D73. So D63 is right here, plus D73 is equal to this number 9362, which matches our total assets. That's why they call it a balance sheet. Okay. So I've already entered the data for Sears for 2016 in the balance sheet, and let's go ahead and go to the income statement. Okay, and we're right here. All right, so now what we want to do is we want to begin to enter these numbers in the appropriate place in the template. So total revenues right here. Okay, I'm going to go ahead and enter that number 22138 000. Okay, and there we go. And then here, cost of revenue or cost of goods is 17452 000. All right, and then gross margin, gross profit. Again, enter the number 4686 000. Okay, go ahead and enter that number. And then going down to operating expenses, research and development, is I'm going to go ahead and just hit a 0, just so I know that I put something there. SGA or selling and general administrative expenses, 6109000. 6109000. Non-recurring expenses, 427000. 427000. And then others of 375000. Go ahead and put that in. 375000. All right. And then total operating expenses. And again, just enter this number, and don't forget it's going to be a negative number of a negative 1978000. And then go ahead and enter that number. Okay. So now go down. Oh, I'm sorry, total operating expenses goes down here. I'm sorry, that's the wrong. I'm not going to sum this out because in this particular income statement, they have it here, but they don't actually sum it, so I'm not going to bother with that. I'm going to go ahead and enter the operating income or loss right here of negative 1978000. Okay? And then go down income before tax, which is right here. I put income before tax, EBIT, that's earnings before interest and taxes. Earnings before interest and taxes, right here. And go ahead and enter that number of minus 1991000. And then go down to income after tax. Okay. Does it look like we have an income after tax? Here it is right here. Net income from continuing operations. I'm going to go ahead and put that in right here, this number. Negative 2221000. Okay, and then finally we go down and enter our net income, which is at the very bottom down here. Okay, and we just type in that number, which happens to be the same. Negative 2221000. All right, so there, we've got our income statement. Everything looks good, and we've got our balance sheet, which I entered the numbers previously. All right, and let's go ahead and begin to do our calculations. So what we're going to do, we'll go ahead and bring this back up, is since we're done with Yahoo Finance, I'm going to go ahead and enlarge this template so we can see everything at the same time. Okay, so over here we have the calculations. Okay, so for asset turnover, it is calculated as total revenue divided by total assets, or sales, total sales divided by total assets. So for that number, I'm gonna enter a formula, okay? So I'm gonna go ahead and enter a plus, and then I'm gonna go find total revenue right here, click on it, and then I'm gonna enter the division sign, which is a forward slash, and then I need to go find total assets, which is right there. Enter. So my asset turnover for Sears for 2016 is 2.36. All right. And again, if you look over here, if you go over even farther, for every dollar I invest in an asset yields X dollars in sales. So interpreted here for Sears, for every dollar Sears invests in an asset yields $2.36 in sales. Sounds good, but there's a lot of other moving parts here that can explain why Sears is in such deep trouble. Okay, so let's continue. We want to go ahead and do inventory turnover now, which I'm going to use the cost side of the equation, which is going to be cost of goods sold or cost of revenue divided by inventory. So I'm going to start, oops, sorry about that. So I'm going to start with entering my cost of goods right there, and then divided by inventory, which is down here. Right there. Enter. Inventory turnover of 4.41. And again, looking at the interpretation, the average number of times a SKU is bought and replaced in a given time period. All right? So 4.41 for Sears. Okay, now we're going to do the COGS percentage, or cost of goods percentage, and that's always going to be a percentage of total revenue. So I'm going to take my cost of goods divided by my total revenue. Enter. Okay, so cost of revenue for Sears is almost 80% of total sales. Okay, all right, and again, looking at our interpretation over here, COGS is the cost of merchandise that is sold in the retailer stores, and then the percentage is reflected as a percentage of total sales. All right, so continuing on, gross margin percentage is gross margin divided by total revenue. Go ahead and enter plus gross margin divided by total revenue. Enter. Okay. Selling and general administrative expense as a percentage of revenue is going to be SGA, which is down here on my balance sheet. I'm sorry, it's going to be right here, not on my balance sheet, divided by total revenue. Enter. So for Sears, that percentage is pretty high, which means there's a lot of overhead, that the company needs to run, a lot of stores and layers of management and that type of thing. So net profit percentage is going to be net profit divided by total revenue. All right. And again, I'm going to go find my net profit right here, which is a negative number, divided by total revenue is negative 10%. All right, and now return on asset is going to be, now I'm going to cross the balance sheet, net profit, okay, right here, divided by total assets, which is down here. So my return on assets is going to be negative. In this case, it's a pretty big negative number of 23.72. I also already calculated the debt to equity ratio, the current ratio, and the quick ratio. And the DE ratio you can see here, if we have to go down a little bit, is total liabilities divided by total equity, which would be this divided by that. And that's going to give me a negative 3.45. And negative debt equity ratios are always bad. Normally, when you have a DE ratio, okay, lower DE ratios are better, but less than 1 is really good. But once you go negative, that means something totally different, and a negative DE ratio is never good. That means the firm with a negative DE ratio is on life support. Current ratio is current assets divided by current liabilities. Okay, for every dollar of current debt I have current ratio dollars of assets to pay that off. Higher is always better. Okay, so to calculate that, current assets divided by current liabilities. Current assets right there divided by current liabilities right there, and that's going to give me 1.07. All right, which means that Sears can just barely pay off its debt, its current debt, with its current assets. All right, but the quick ratio, then, what that does, that's an even more stringent test of a firm's ability to pay its debt, and because it excludes inventory. So for every dollar of current debt that I have quick ratio dollars of liquid assets to pay that off. Liquid meaning no inventory. So in this particular case, if Sears debtors called up Sears and say, okay, you need to pay us now because you have defaulted, Sears would have only approximately 16 cents in liquid assets for every dollar of debt that they have. Okay, so what you'll do then is you're going to fill, for your retailer, you'll fill in the data for 2016, 2015, and 2014, or whatever the year end is most appropriate for your firm. And again, make sure that you're using annual data, okay? And it'll be the 3 columns that you see for your firm will be the 3 columns that you enter here. So you enter all of those, and then you go find competitors. And if for Sears we wanted to do a competitor, let's say J.C. Penney. All right, and J.C. Penney. This is not the one I want. I think it's JCP. There we go, J.C. Penney Company. And I'll do the same thing. I'll enter these data in the columns. I'll just enter, just the year end 2016 in the column for J.C. Penney, and then you'll pick another competitor and do the same thing for the most recent data. Okay, and then you're going to calculate all of these ratios for your retailer for the past 3 years, and then your retailer against 2 of its major competitors for the current year only. Okay, and then you'll be able to then begin to take a look across 3 years what your retailer is performing, whether it's increasing or decreasing, and then you'll be able to compare your retailer in 2016 with your competitor on the same ratios, okay, again, to give you a better feel. Okay, so that about wraps it up. And so what you want to do is go ahead and spend the remaining time with your team to fill out this template, okay, and then upload this template. Go ahead and change these, put your retailer's name in here, okay, and like I did over here with Sears, and put your 2 competitors, all right, and then you want to go ahead and upload this to your team folder. Okay, so I think that's about it, and good luck on everything, all right, and we'll see you in class on Monday.